With inflation running hot, are you worried about how to make your cash savings work harder to keep pace with price rises? In this video, we're going to break down the secret investment that likely beats your bank's savings account. This investment is used by institutional investors, professional investors, and high net worth individuals. And the best thing is, you can easily invest your cash this way also. Let's get into it. Have you noticed things getting more expensive? In the UK, we have a well-documented cost of living crisis. And all the world over, inflation is running way over central bank target levels. This is a big problem because it eats away at your purchasing power. In the US, inflation sits at 2.9%. In the UK, inflation sits at 7.9%. And in the Eurozone, inflation sits at 5.5%. And what are central banks doing? They're raising interest rates to tackle this inflation problem. In the US, the Federal Reserve rate sits at 5 to 5.25%. In the UK, the current official rate set by the Bank of England is 5%. And in the Eurozone, the main rate set by the European Central Bank was just raised to 3.75%. And many analysts expect rates to rise further from here. Now, higher rates should be good for savers, right? But one issue emerging is that the savings rates offered by banks today aren't keeping pace with the interest rate rises from central banks. And your money isn't keeping pace with inflation. If this is a problem you're worried about, and I know I am, then this little-known investment fund style could be for you. So what am I talking about? Well, today I'm talking about money market funds. What is a money market fund? According to Investopedia, a money market fund is a kind of mutual fund that invests in highly liquid and very low-risk cash and bond instruments or securities, such as US Treasuries or corporate credit securities. And despite the fact that most people aren't even aware money market funds exist, the money market fund industry is no small industry. Hey, quick one, if you want to make a really smart investment decision, go ahead and click execute on the like and subscribe buttons. That way you won't miss out on future investing tips and insights. Plus it really helps the channel. Thank you. So according to the Investment Company Institute, there are over 2,700 money market funds available to retail investors internationally. And that represents just 2% of the 137,000 open-ended regulated mutual funds globally. However, these money market funds represent 15% of total global assets. That's $8.9 trillion. So it's no small market. In my recent video covering BlackRock's latest investment outlook, I talked about how savers in the US had pulled billions of dollars from US bank deposits, at the same time as we've seen billions of dollars of inflows into US money market funds. And this makes a lot of sense. Money market funds offer a great alternative to cash savings with many benefits. And let me talk about those now. First, as I've mentioned, money market funds typically offer higher yields than your regular bank savings account, so a better return for your cash. For example, the average easy access savings account here in the UK offers a yield of around 2.53% according to Moneyfacts, which is a UK data provider. But many money market funds today offer yields in excess of 4.5%. Plus, in some jurisdictions, tax on income from money market funds is taxed at a lower rate than, say, income tax or a tax on dividends from stocks and shares. Second, money market funds offer high liquidity, meaning that you can access the money easily, typically within 1 to 2 business days. So the money's there when you need it. Third, safety. Money market funds are considered very low risk and very safe because they invest in cash and low risk, short-dated fixed income securities. So how can you invest in money market funds? First, start by researching the money market funds available to you in your country. Look for reputable fund providers and products and then compare their fees, their historical performance, and their minimum investment requirements. After researching and choosing, you'll next want to open a brokerage account if you don't already have one. And the best thing to do is to pick a regulated brokerage account or platform in your country. Third, decide how much you want to invest. Money market funds have low minimum investment requirements, meaning they're available to a wide range of investors. And fourth, consider automatic regular payments. This is a great way of building your wealth over time. Before you jump in, here's just 3 more things to consider. First up is fees. You'll notice when you're doing your research that different funds charge different fee levels, and this can impact your returns over time. The next is interest rate fluctuations. Yields on money market funds are sensitive to interest rate rises and falls. So when interest rates rise, the yield will rise, and when interest rates fall, the yield will fall. So you'll want to be paying attention to interest rate changes from central banks. And lastly, diversification. Money market funds are a great tool, and I personally like them for emergency funds and short-term investments where you might want access to the cash. However, as part of a long-term wealth building portfolio, they won't do the job, and you'll want to consider other investments like stocks, bonds, commodities, and other investment strategies and styles. So let me give you some examples. Here are 5 money market funds that are likely beating your bank's savings rate today. Number 1, the Vanguard Federal Money Market Fund. This fund yields 5.05% and has an expense ratio of just 0.11%, making it one of the most cost-effective options in the market. 2, the Fidelity Cash Fund. This fund yields 5.11%, has outperformed its benchmark over 1, 3, and 5 years, and has an annual management charge of 0.15%. 3, the BlackRock Cash Fund. This offers a yield of 4.54% and involves an ongoing charge fee of 0.24%. 4, the JP Morgan Liquidity Fund. This has a yield of 4.81% and ongoing charges of 0.21%. And 5, the Pictet Short-Term Money Market Fund. This fund offers a whopping 5.5% yield, although fees are slightly higher at 0.34%. So in conclusion, money market funds can be a great alternative to your traditional bank savings account. As mentioned, I really like these as a place to store your emergency fund. As ever, your capital is at risk and past performance is no guarantee of future returns. And I always recommend speaking to a qualified financial advisor for big investment decisions. I hope you found this video valuable. Give it a thumbs up and subscribe, and I'll see you next time. Until then, keep investing selectively and effectively.